important. So Prabath, let's begin where we always should, which is with the evidence. Because I think a lot of investors have probably heard the headlines over the past few weeks, but very few have probably actually looked beneath the headlines.
That's probably true. The headlines are not necessarily incorrect. So, because headline inflation it is, right? The ABS reported an annual CPI of 4%, right? And if that's the only figure someone saw, yes, the inflation has decreased. But the monetary policy isn't based on the headline inflation. That is based on the trimmed mean inflation or core inflation. The Reserve Bank pays much more attention to that. And what commonly measured by is what remains in the economy as inflation, right? Most of the volatile items are removed, and it accounts for the less volatile items in the basket. Importantly, that figure has increased from 3.4 to 3.6%. So that's the one RBA cautious about.
Right. So, I guess although many people are actually obviously celebrating inflation falling, the measure that the Reserve Bank watches probably most closely is actually moving completely in the opposite direction.
That's right. Because trimmed inflation has increased, the headline inflation has decreased. There's important distinction because those two figures tell different stories. The headline inflation reflects what consumers are experiencing, and then the trimmed mean inflation measures what remains within the economy. When you combine those figures with the cash rate, of course, that's why RBA is practicing a cautious approach.
And so I think this is where many investors unintentionally oversimplify the conversation, right? Because the assumption becomes, well, if inflation is falling, then interest rates must be next, right? But the data actually suggests that it's probably a little bit more nuanced than that, right?
Exactly, because the economic cycles are not straight line. So the cycles are persistent, right? And then policy decisions rarely respond to a 1 month data, and they look at the persistent data and evidence accumulated over time. So therefore, that's why RBA is really keen on the inflation going on and then making the cautious decisions.
Right. And so I guess this is why we're really sort of having today's discussion. It's not because we sort of know where interest rates are going to go next, right? Because we don't. No one really does. But it's more because I guess good investors don't build portfolios around certainty. They build portfolios that can continue performing across a range of various scenarios, right?
That's exactly how institutional investors does. They analyze the scenarios, then try to look at the uncertainties around scenarios. And it is about understanding how different economic environments might affect investment decisions rather than predicting a particular number.
With that in mind, probably brings us to probably the most important question of today's discussion, which is, if rates remain higher for longer or even move higher again, would your portfolio still even be positioned in the way that you had originally intended? Because that's a very different conversation, right? From simply asking, well, when interest rates might fall.
Yeah.